Hi guys, it's your guy here, the unknown trader, and today I want to show you something very important, very important. This will help you maintain consistency, and if you are not yet consistent, it will help you become consistent. Okay, however, you must have a good plan in place, and I will do another course to show you how to actually draft a plan. Okay, so today was Wednesday, it was day 3. Okay, on the weekly template. Okay, and day 3s are very volatile. So as long as there was no news here, everything was gonna be normal, because as you can see, today was clean, guys. uh the only news we had was New Zealand dollar. This was inflation expectation, which came at 5 a.m, and this is the hour that closes the Asian session for me. So once I see nothing uh during this hour, what I will do is I'll close everything. I might wait for 30 minutes just to see if something is building up, but after 5:30 I'm closing everything if there is nothing that has happened yet. Okay, then I'll wait for 3 hours for the next session, but I usually don't take the Asian session. Okay, so today was clean. We can't talk about this China currency because it is a fixed currency. It's not moved by the market. It's actually uh, kept stable because China's economy is driven by exports. Okay, so yeah, I'm not gonna explain much on that. So let's jump into the business of the day. Actually, as you can see, today was a good day. Okay, this is GJ, and I want you to understand something. Okay, this was day 1, day 2, day 3 on the weekly template. As you can see, this market was going up. It consolidated at the top after day 3. Why? Because it just touched and enough to close those who were in profit, but not enough to bring those on longer time frames in. So what we can say thus far is this was day 3, and then started again day 1, day 2. Okay, so this is what you should follow, day counts. However, I know that if I just start explaining things like this, most of you are going to be confused. So what I'm going to do right now is I'm just going to show you the setups from the beginning, because it's not going to be easy though, but I have to do this because most of you are going to get confused. Okay, so I want this to be helpful as it can. Okay, right now, as you can see here, setups, you can take a book and just try to write this somewhere, because it's one of the most important things that will really help you and turn you into a consistent kind of trade. Okay, so I'm going to show 3 setups. Actually, there are more than 3, but I'm going to show, okay, 3 setups, and most of these ones are taught by Stacy. Okay, so I also have setups that are taught by Steve, because I took his courses, and I also have setups that are taught by Stacy, and I have a number of setups. Okay, so it's not about the setups, it's not about who teaches it, it's not about the course you did. If you are following Stacy, he's enough. His content is enough to keep you profitable for the rest of your life. Okay, I repeat, Stacy's content is free and is more than enough to keep you consistent for the rest of your life. Okay, so let's start. We have 3 setups here that I'm going to talk about today. This is 1, 2, 3. Okay, in terms of days. Okay, and I'm writing this like this. Okay, days. Okay, and I'm gonna write another setup here. This is 1, 2, and 3. This is on a weekly cycle. Okay, you can just write this somewhere. Weekly template. We know that each week, each month, each year, and each season has its own template. Okay, I'm not gonna go deeper into that, okay, because this video will get crazy long if we start talking about that. So, and we have day 3. Okay, this could either be longs or shorts, and I'm gonna explain this. Okay, so guys, these are 3 different setups. Never mix them, okay? Never confuse them. There are three different things, okay? Repeat with me. There are three different things. Repeat again. There are three different things, okay? And I'm going to explain everything, okay? But just bear in mind that these are three different things. So right now what we're going to do is we're going to start with 1, 2, 3 in terms of days, okay? I'm not going to call them by their names, okay? But I'm just going to do this, okay? 1, 2, 3 in terms of days. We have 1, 2, 3 on a weekly template. And we have day 3s. They could either be short or long, okay? Repeat again. 3 different things. Never mix them, okay? Never confuse them. You can use them interjoined, but never confuse them, okay? I repeat again. Why? Because this is important, and this is where people are missing the point, okay? These are 3 different things, okay? 3 different setups. 3 different setups. You can repeat again. 3 different setups, okay? I know this sounds like crazy, okay? And I know you're getting annoyed. It's fine. But I want you to understand this. Do not mix these things, because the moment you start mixing them, that's where you're going to get lost, okay? And just flush out most of the things that you know, okay? Just for now, okay? So when we talk about 1, 2, 3 in terms of days, okay? In terms of days, what are we talking about? We are talking about maybe okay, it's fine. We are talking about maybe a market that has been going up for a period of 1 day or 2 days, okay, or even more, okay, which is that market opened low and closed high. Okay, the following day it did the same. So this market was moving up, okay? It was moving up or either down, okay? For 1, 2 or more days, okay? What we are saying is the market must either be pumped, okay? Or it must be dumped, okay? It must, Stacy teaches these things very well, okay? The market must be either pumped or dumped, okay? Pumped is taking the market up, okay? Up, okay? Up. Don't confuse that, okay? And dumped is taking the market down. So there are going to be 2 things when it comes to the market. It's either it's going to be pumped, taken up, or it's going to be dumped. Okay, and mostly when there is a pump, there's gonna be a dump. That you can be sure about, because that's all there is on the markets. Okay, so we need a market that is pumped for at least 1 day, 2 days, or 3 days. Okay, or even more. It depends. So as you can see, this one, it went down, vertical. Okay, the following day it opened low and closed high. This means this day was bullish after making a peak low. That's good, okay? After making a peak low, it became bullish. So what do we call this day? It doesn't matter if it's Monday, Tuesday, Wednesday, Thursday, or Friday. This day is called day 1, okay? This is called day 1. And don't confuse the days, because everything I'm going to talk about will be in terms of days, okay? This is day 1. Why? Because the market went up. Day 1. And then as we proceed, this is day 2. Why? Because the market is still going in one direction, which is up. It's still in the pumping phase. This is day 2. And this is day 3. Why? Because the markets went up. If you look carefully, what happened on this day? Let's just okay, quite quick. We're gonna switch to a 1-minute chart. I just want to show you what really transpired on that day. Okay, let's go back. Okay, actually, let me just do this so that we can see things clearly. Okay, I said, which one was day 1? Yes, I said this was day 1 because it opened low and closed high. This became day 2. It opened low and closed high. This was a bullish day. and this became day 3. Why? Because you see, this market did break this line at the top, and when it breaks, remember, it's breaking the high is okay. This is the top that the previous day reached. So when it breaks, it's enough to close everybody from this day. In my previous video, actually I'm pinning it up at the top here, just look at the spreads. I showed you spreads which went beyond 20 pips. So if they can be here and throw a spread of 20 pips, that means they are gonna get to up to this point. You see, they will get up to this point. So this is enough to close everybody who entered here, everybody who sold here was closed here. Again, if we continue, you see, it did, okay, it broke this day. So this becomes what? This becomes day 3. Okay, so I'm gonna put this as day 3. Okay, this becomes day 3. Okay, sorry for this moment. Okay, this is day 3. Okay, now I'm gonna go back to 1 hour time frame. I just wanted to show you that I'm calling this a day 3 because it did actually break the high of the previous day. So what we have is, we have a market that has been going up for 3 days. We call this a pump. Why? Because the market is being pumped into one direction. Okay, that's why we are saying this is a pump. It's being pumped up, it's been taken up. Okay, and most indicators on day 3, that's when they will start detecting the underlying trend, and Steve explains this quite well. Okay, Steve explains this quite well when it comes to the market makers, when it comes to trapping, when it comes to all the tactics that the inside guys will throw at you, all the manipulations. Steve is the best. Okay, I won't take that back. When it comes to manipulation, the inside guys, how they operate, Steve is the best. And when it comes to these setups, Stacy is the best. Okay, Stacy is the best because his setups are more than enough to keep you consistent. And I'll say again, they are more than enough to keep you consistent. So now we have a market that has been going up for 3 days. However, on day 3, that is when most of your indicators are starting to show you the underlying trend, and that's when most of people using indicators will be buying. Note that, just write that down. On day 3, most of the time, indicators will start revealing the underlying trend. Why? Because they are always late, hence they are called lagging. Okay, you won't find an indicator that actually influences a decision of buying or selling that is not lagging. All indicators are lagging. Okay, and there is an objective for that. That's how the markets have been made. They've been made in a way that they, when you are using indicators, it will take time for those indicators to detect the underlying trend. Why? Because the role of the market is to take capital from many and give it to few. Okay, taking from millions of people and giving it to maybe 20 people, maybe 100 people. Okay, those are the people who control the economies of the world. But we're not going to talk about that right now. Okay, so on day 3, just because most of the indicators will be revealing the underlying trend, what will happen? Okay, you can just think about this, common sense. That's when they will be ready to trap, and after trapping they will reverse. So markets do 3 things: they show, they trap, and they reverse. That's all there is. They show, they trap, they reverse. And for this to be effective, they must use the advantage of indicators. They must take advantage of indicators because most indicators are lagging, and when indicators are lagging, that's when they will be showing you the underlying trend on day 3. So market makers will be doing what? They will use that to their advantage. They will manipulate you crazily on day 3. Okay, that's what they are likely to do. So on day 3, we are expecting a reversal most of the time. Okay, so this is day 1, this is day 2, this is day 3 in terms of days. Okay, in terms of days, I told you, do not mix this thing. Okay, now the tables are turned. When the tables are turned, don't want to confuse you, okay? Now this is gonna be day 1. This is gonna be day 2, okay? Yes, we can take this as a day 1, but I'm not gonna do that. Now we are taking this as a day 1, this as a day 2. Do note that markets are not perfect. Your rules just have to be more strict, okay? This is day 1. Why? It now opens high and closes low. This, if you are using a daily time frame, this will give you the first red candle, okay? So the following day is day 2, okay? And then look at what they give you, an inside day. You can write this down. Inside days symbolizes one of two things. It's either the market is going to continue rolling in the direction or it's going to reverse. Write this down again, I repeat. An inside day shows one of two things. It's either there's going to be a reversal or else there is going to be a continuation. In this case, on day 2, they give an inside day. What does an inside day show you? It shows you a continuation or a reversal. What happened in this case? They reversed. Okay, when they reversed, now let's look at what's happening. This becomes day 1. Why? Because it opened low and closed high. This is the closing, okay? So, in other words, it now opened low and closed high, okay? I think I should have used red for these ones, but this will... okay, let me just use red. Why? Because this is now a downtrend. Okay, when it's down, we use red. Most people are comfortable with using red and green, and hence those are the colors they use on their charts. Okay, I'm using black and white. Sometimes I use gray. I can use any color. Okay, it's no longer confusing. Why? Because the more time you spend on the charts, the more comfortable you become, and the more you start understanding. This is GJ. I'm not surprised if GJ just touches and goes back. Why? Because I've spent enough time on the charts to know what GJ is capable of. Most of the time, GJ will do what will touch and then go. Most of the time, GJ will just touch. Okay? Because at first, this actually frustrated me because I will be waiting for something to see if there is a fake breakout or what, and it will just come and touch and go to the other direction. This is what GJ is capable of. Is touching the high the previous day, closing everybody who executed on the previous day, and then it just goes to the opposite direction. GJ is capable of that. So I'm not surprised if GJ just touches and go. GJ can just touch and go, okay? It can just touch the low and then go. Doesn't matter. This is GJ, okay? So that's why I say spend time on your charts. Okay, it doesn't matter which course you do, and I'm going to repeat this. It doesn't matter. You can buy tons of courses, okay? As long as you're not going to put it into practice, as long as you're not going to spend enough time on the charts, that won't change anything, okay? The more time you spend on the charts, the more everything becomes clearer, okay? And I mean hundreds of hours. Okay, hundreds of hours. I'm not talking about spending maybe an hour a day and then closing tomorrow and out. No, you won't understand anything. Okay, even if you buy the best courses, even if you get a mentor who will hold your hand every step of the way, okay, you will not it will not change anything if you are not spending times on your charts. The same applies to if you're a soccer player and you have the best coach and you even have the best teammates. You have Lionel Messi on your side. If you don't practice, nothing will ever change, okay? So the more you practice, the better it becomes. If you're a dancer, same applies. Whatever you are doing, okay, if you don't put in that work, it won't change anything, okay? If you're a drawer, it won't change anything. An artist, graphic designer, web designer, if you don't spend time doing your craft and perfecting it, then nothing will ever change, okay? Because one thing I've realized is people need a system that is perfect, but they don't want to practice it. They just want to know it and just execute. No, this is what separates best guys from the rest. You must spend time perfecting your craft. It doesn't matter what it is, okay? Even if you're a musician, you must spend... I actually have a friend who is a singer, okay? And he spends most of his time singing. Okay, so that's how you perfect your craft. So enough about that. Okay, so now we are still on this first setup, okay, which is 1 2 3 on days. Okay, on days, not on the weekly template, not on day 3, but now I've mixed with day 3. Let's go back and look at day 3. Most of the time on day 3 we are looking for either a fake breakout then a reversal. Sometimes it will be a breakout and continue. Markets are not perfect. Your plan must be bulletproof. Your plan must be good, must be strict. Okay, you must have strict entry criteria. Okay, so that's what will work. Okay, on day 3, now we are going to the second part. We are going to this one, day 3, longs or shorts. What is longs? Longs is if the market has been going up for 2 days and it goes up for the third day, breaks the high on the third day, then those are longs, because people are it's at the top, okay, after market has been going up. So if the market has been going down for 2 days and the following day it's day 3 and it breaks the low of day 3, those are shorts. Why? Because those who shorted are in profit. Okay, so now we are mixing with day 3. We did day 1 2 3, even though we haven't completed it yet. Okay, because on day 3, this is day 3, this is where it kicks in. 1 2 3, show, trap and reverse. On day 3 we are mostly looking for a fake breakout and a reversal. If you get that, then you have a good entry. Okay, if you don't, then you don't. Okay, so I'll continue with this one. This was a day 2, it opened low, closed high, and then today was a day 3. Okay, for me it was a day 3. Okay, I don't know, it can still go and continue being a breakout and continue going up, but today for me was a day 3. Why? Monday gave me a day 1, Tuesday gave me a day 2, and today was a day 3. You can see it broke the top, it broke the top, it broke the top. Okay, just as I've been showing you, and knowing the capability of GJ, Great Britain versus Japan yen. Okay, it is capable of touching. Okay, it does that pretty well. So today was day 3. On which strategy? The day 1 2 3, 1 2 3 in terms of days. So again, if tomorrow it goes like this and it opens maybe here and closes low, that will be day what? Day 1 again. We start counting again and again. Not every week is gonna be perfect, because as you can see here, it's a day 1, day 2 inside day, and then it went back to day 1. Okay, so those are some of the tactics, because if it becomes perfect, then the goal of the market won't be fulfilled. What is the goal? To take capital from many and give it to few. Okay, so knowing this will give you an edge. And on day 3 we are expecting a fake breakout and a reversal. Okay, that's what I'm expecting. That's what even Stacy teaches. Okay, so if it doesn't happen, it didn't happen. Okay, so don't enter blindly. Okay, don't enter blindly. Just because it's a day 2, today it gave a day 1, doesn't mean tomorrow it's gonna be good. Okay, look at the behavior. Does it break and trade above and go down and lock the high? If it does that, then it's gonna go down. Then your day 2 was invalid. Okay, just know that there are many days that are going to be invalid, hence we have a lot of currencies to choose from. If this one is invalid, you can come to UJ. If this one is invalid, you can come to gold. This one is invalid, you can come to New Zealand dollar versus Japan yen. There are many currencies you can choose from. Okay, so don't stick on one. If it didn't set up in the best way, then move away from it. Okay, tomorrow it might set up in a good way, the day after tomorrow. Okay, so just know that do not force things that are not perfect. Okay, do not force things. The same applies to relationship. You force it, you will cry. So do not force it. If the currency has not set up in a good way, leave it alone. Okay, leave it alone. Come and check it tomorrow. Okay, and see how it has done. So this is in terms of days, and on day 3 we are mostly expecting a fake breakout. Why? Because on day 3, that's when indicators are starting to show people that it's an uptrend, and that's when the market guys will be ready to punish. Okay, show, trap, reverse. show you it's going up. How do they show you? Indicators will only show you on day 3, most of them, because they are lagging. So on day 3, that's when the showing becomes active. That's when they start trapping, maybe give a fake breakout and go the opposite direction. Okay, now we are coming to the last one. Okay, now what did I do? Sorry. Okay, now we are coming to this weekly template. I just want to talk about 3 setups. Okay, day 1, 2, 3. Okay, it's when the market is going in one direction for 3 days, breaking the previous day's high, breaking the previous day's high. If it's a downtrend, it's breaking the previous day's low, breaking the previous day's low, and it's actually going down. Okay, and then this one of day 3s, it's when actually on the 3rd day it gives a fake breakout and then it locks the high, so it can either go down or give a signal day. Okay, because this is just a day that it's not really traded by you or tradable. This is a signal day. It shows you what will happen tomorrow. Okay, however, most day traders will actually go give a good opportunity. Okay, so you just have to know. So now we are coming to this one, 1, 2, 3 on a weekly template. I don't know if this is clear. You will let me know. Okay, because that's just a lot. 3 setups in one day, and in less than an hour it's gonna be crazy. Okay, so now we are going to the weekly template. When you come to the weekly template, every Monday just put a 1 here. Okay, Tuesday just put a 2. Okay, Wednesday just put a 3. Okay, this never changes, it stays the same. Okay, don't even put day, it's so that it doesn't confuse you. Just put the numbers. Okay, so I put a 2 here and I actually put a 3 here, so this was wrong. So just do this. Okay, make sure to do this every Monday. The moment you open your charts, just mark. Okay, on Monday you mark day 1, on Tuesday you mark day 2, on Wednesday you mark day 3. Because you won't have a Thursday and Friday, you can wait. But for me, I can just put 1 again. Okay, this is how it's gonna go. 1, and then we put 2 here. No, wait. Okay, wait. I don't want to confuse you. Okay, let's just leave it like this because this is more advanced. I can come, because now I understand a little bit of this. I can come and just say 1, 2, and then 3 again, and this might just confuse you. Okay, this might confuse you because most of the time you'll find that day 3 becomes day 1. Say for instance, it gives a fake breakout and then it comes down. That means, okay, let me look for another day 3 that maybe was that 1, 2. Okay, wait, I'm looking for a day 3 that I can give you an example using. Okay, it's gonna take me time, or else let me make another video on that. But there are most of the times when you find that, okay, it is day 3, it breaks out and then it goes and comes and closes here. What would have happened is it would have opened here and then it went up. Okay, it gave a fake breakout like this, and it closes maybe here. So in this case, what happened is it is a day 3. However, it became a day 1 because it opened high and closed low. It becomes a day 1. You take if it gives you a fake breakout and it locks the high, you take that trade, and then at the end of the day when it closes, you mark it as day 1 again. Okay, I know this is gonna be confusing, that's why I don't want to use it right now, but most of the day 3s will eventually become day 1. Okay, hence we have this day 3, longs or short, because if you get that opportunity on day 3, it gives a fake breakout, which it will most of the time. If it gives a fake breakout and then it goes the opposite direction, that's a very good that's a good opportunity for you to take. Okay, so that will automatically become a day 1 because it will have opened high, yes, giving you the opportunity to short, which is a day 3 opportunity. okay, and closed as a first bearish day. So that will be day one, but I'm not going to talk about this right now because I don't see it on this currency. Maybe as we go forward to other currencies, it will I will see that that example, and that's where I will show you. Okay, but for now, let me just take this away, because yes, day one, day through. Okay, there are currencies that will give day one, like here. Let me show you. This is gonna be so complex, guys. I just hope you will understand it. Okay, Monday, Tuesday, this is always day one and day two. Okay, so let me take this one away, because if I do add this, then it's gonna be, you might miss the point. Okay, let me just take this away and just use something that will be simple. Okay, maybe as we go forward, when you get to understand this, that's when we can explain that. Okay, so Monday, Tuesday, Monday, Tuesday, Monday, Tuesday gives you a clear overview of how the entire week will be. As you can see, Monday made the low, Tuesday made the high, and then yes, they came down, and now they are bouncing on it. They are bouncing on it. We are waiting to see how this is gonna turn out. Are they gonna break it and go up, or are they gonna give a fake breakout and go down into the bushes? That's what we are waiting for. Okay, let me just use the previous week as an example, because this one is complete. Okay, you just have to know the different kinds of weekly templates that we have. Okay, as you can see, Monday made the low and the high of the week. Tuesday kept on touching it, hitting it, gave actually a triple top. It broke structure on the inside. Go to my previous video, you'll see, actually go to my description. I will put that video in the description as well. Okay, break of structure on the inside. So Tuesday did what? Tuesday was just hitting the top, go up, go up, go up. That's just trapping, which is part of the 1, 2, 3 in terms of days. But now, because now we are talking about the template, now this becomes this becomes the day one. Okay, no, I don't have to pull this entire thing. Day one, and then this becomes the day two, and then becomes the day three. Okay, this is where I will end. I'm not gonna take it further, because day three also will be day one on other currencies, and Thursday will be day two on others, and Wednesday will be day three on others as well. Okay, so right here it's day one on the template. When we're talking about the template, it's another thing. Okay, bear that in mind. It's another thing. This is another thing. Okay, always bear that in mind. It's not the same thing. This is another setup. Let me change the colors here. This is another setup which stands alone. This is a setup that is standing alone. This is also a setup that is standing alone. However, when you combine them, you get a clear picture of what's happening. Okay, so let's see. This is always day one. This is always day two. This is always day three. Why? Because it's Monday's day one, Tuesday's day two, Wednesday is day three on a weekly template. Never change this. Okay, and don't confuse it with this. Okay, this is where it's continuously maybe closing low, opening low, closing high. This is when it's going in one direction for 3 days. Okay, going in one direction for 3 days, going in one direction for 3 days. But this one, when we talk about a weekly template, Mondays are always day ones. That never changes. Okay, Monday is always day one, Tuesday is always day two, Wednesday is always day three, and this is the most volatile day most of the time. Okay, or it could give you a different signal. Look at what day two did. Day one made the consolidation. Okay, made the high and the low. Monday, Tuesday, they make the consolidation of the rest of the week. And then after you know the consolidation, okay, we speak about 3 things that market always do. Stacy always speaks about this. Okay, okay, let me go to the previous let me come here, maybe I'll explain it well. We have a consolidation. Okay, we always have consolidations. Okay, so what happens in a consolidation? This is what happens. They are gathering orders. Okay, they are gathering orders. Okay, up and down they're gathering orders. You don't want to be in the middle. Okay, unless maybe you have a strategy about that. Okay, or unless you are using a very high time frame. Okay, so the market will break out. It will pull back. Okay, most of the time, maybe 80 to 90% of the time, it will pull back, and then it will actually continue going down. Or else, okay, let's take okay, let's take this away. Okay, or else they will actually break out, pull back, and reverse. Okay, now again we are taking this away. These are two things the market can do. They can break out, pull back, and continue in the direction. This is trend. Or else they can break out, pull back, and go the opposite direction. That is to reverse. Or else they can break out and wait. Okay. I made a mistake. Or else they will just break out, pull back, and continue gathering orders, consolidating. So these are the three things that the market is gonna do. What is it? I want you to understand it. They are gonna break out, okay, pull back and trend, okay, or they are gonna break out, pull back and reverse, or else they are gonna do what? They are gonna break out, pull back, and continue trending, actually consolidating. So these are the three things the market is gonna do. I believe now you understand this better. Okay, if you don't, I don't know. Sorry, but I don't know honestly, because I'm showing you that markets will do three things. They will break out, pull back, and trend. They will either break out, pull back, and reverse, or else they will break out, pull back, and consolidate. Okay, these are the three things they are gonna do. This is the three things they've been doing, and this is the three things they do. Okay, so now I believe you understand that. So no need for me to explain it here. Okay, because I almost explained it here. So Monday, Tuesday on a weekly template, it's a different strategy. Okay, from the three that I'm explaining today, there are many strategies, but today I chose three. Okay, so this makes the weekly consolidation. This is day one. It made the high and the low. Okay, day two did what? 1, 2, 3. It hit the high. It trapped. It propelled people to go high. Okay, it propelled people to go high. And then Wednesday, day 3, changed the direction. Okay. Today, Monday made a high. Tuesday extended that high. Tuesday will either extend the high or the low, or do this. Okay, there are many variation on the weekly templates because they don't use one weekly template. However, there's gonna be a weekly template anyway. And the more you spend time on your charts, I'll repeat again, the more time you spend, the better you'll understand these templates. If you're waiting for someone maybe to tell you, okay, there's a template that goes like this, there's a template that goes like this, there's a template that goes like this, well then, I don't know. Okay, because that's a lot of work. Okay, but you can figure this out when you are practicing. So let's look. It changed the direction, then it broke the consolidation on the downside, and then it reversed back inside, and then it closed Friday. Okay, it closed Friday. So right now we don't know what's gonna happen. Is it maybe gonna repeat this, or is it gonna break out and actually pull back and continue trending? Is it gonna break out, pull back, reverse, or is it gonna break out, pull back, and consolidate? We don't know. Okay, we don't know. So we are waiting for tomorrow to give us signal day. Tomorrow will tell us Is it gonna close as a red? Is it gonna close as a red day? Is it gonna close as a bad day? Is it gonna close as a day that opened high and closed low, so that the following day we will get day 2 of shorts? We don't know. Okay, so we will approach each day as it comes. Okay, so because what I've realized, when you say this is what I'm projecting, this is what I'm expecting, people take it as it is. Okay, because last week I did a video about this week where I showed, okay, this has been trapping and stuff, and I was saying maybe on Monday I'm expecting maybe the market will go down, and people actually sold. But I didn't understand why, because on Monday this market never gave a sign for selling. It was just on one side. Okay, one side. So I don't understand that people are sold just because you say this. So I'm not gonna do that again. Okay, we will approach each day as it is presented, and that is why it's gonna be hard to actually make projection videos. Yes, I believe they are helpful, but they are also damaging. Okay, because that's what most people tend to rely on. Okay, so we had a market that on Monday made a high and a low template. Okay, and when we talk about this template, we said Monday is always day 1, Tuesday is always day 2, and Wednesday, I took this whole 2, sorry, and then Wednesdays are always day 3s. Okay, Monday is always day 1, Tuesday is always day 2, Wednesday is always day 3. Okay, so let's see, it made a consolidation. Day 2 gave an inside day. Okay, day 2 gave an inside day, and then it gave a red day. It opened high and closed low. Now it gave a sign that, okay, now the markets are preparing to go down. But even if it gives you a sign like this, the following day you don't enter blindly. Just like I said I was looking for a sell, but people took it even though there was no sign of selling. Go to a smaller time frame. The market was always on one side, on the top side. Look at the EMA. This market is far from giving a selling signal, but people sold anyway. Sorry for that. Okay, so now it gave a day 1, where on the days, when it comes to the days, 1, 2, 3 in terms of days, that's when it gave day 1, and that's when it gave a day 2. Okay, that's when the following day it gave a day 2. Okay, it opened high, closed low. Following day opened high, closed low. Okay, and it gave a day 3. Okay, oh yes, I said I don't see this. You are like you. Okay, this is a day 3. Why? Because it break the low of day 2. However, this market went towards the end of the day and closed as a day 1. This is why we took it as a day 1, whereas it was a day 3 fake breakout. Okay, this is that other setup that I showed you, the day 3, because we know if the market has been going for 3 days, indicators are showing you that it's a downtrend. That's when they will give you a fake breakout to confirm what indicators are saying. When most of you are buying and buying and buying, that's when they will reverse. So this day was day 3. However, when it closed as a day 1. So you see there are days that will have 2 signals. Okay, it was a day 3, but as it closed as a day 1. So it gave an opportunity going down, maybe from, okay, you could have taken it from someone lower time frame back to the low, and then after taking that later in the day, it gives a signal for tomorrow. Unfortunately, the following day it didn't fall enough pips to give a good entry, but if it's more than 25, yeah, it was more than 50 on a smaller time frame, you got a good entry. Okay, and you could have maybe locked the profits here and allowed it to go up. Okay, so this is an example of a day that is a day 3, but eventually turns into a day 1. Why? Because day 1, day 2, they broke the low of day 2, which makes a day 3. However, as it went to close, it closed as a day 1 because it opened low and closed high. This is a day 1. They are showing you a change in direction. Okay, so this was a dead giveaway. Now I'm still trying to explain the setup where we talk about Monday and Tuesday. This is the high of Monday. This is the high of Monday. This is the low of Tuesday. So in this case, what happened? Monday made the high. Monday made the high. This is the high of Monday. Monday made the high. Tuesday made the low, okay, of the consolidation. And the market broke out, and then they trapped, and they reversed, okay. And when they reversed, they went beyond the line or the high of Monday. So this is always day one, always day two, always day three. You can use them interjoined, as I showed you here. It is day one, day two, day three, giving a consolidation. However, on day three, which was Wednesday, it gave a sign that, okay, now we are giving a day one, day two, day three. Okay, so you can just use them mixed, just as I showed you here today. Like this was day one, day two, day three. However, on a template, this is always day one, day two, day three. So you can use them interjoined. And then on a day three, this is when it gave this sign that it's now going down, and then the following day, yes, it gave a day two inside bar, which shows you either a continuation on a reversal. In this case, it became a reversal, and it gave a day one. Yesterday gave a day two, which on the weekly template it just extended. So now we have a consolidation, and now it's just hitting the top. We don't know what's going to happen from here. We will just see tomorrow. And yeah, tomorrow, if it opens high and closes low, then it's a good signal for Friday. So that's how it goes. Okay, no guessing, no this and no that. So yeah, just take a each day as it goes. Okay, Monday is always day one, it makes the high. Tuesday is always day two, it makes the low. They break out, and then after breaking out, they pull back and they reverse. You see? So basically, this is how most of the time they're gonna be. Okay, so now I've showed you three setups, and I don't think you'll ever mix them again. So let's look at today, how today was and how beautiful today was set up. First of all, there was no news, and we're just gonna try to use what we have been talking about. Okay, I don't know if it has been clear, but yeah, I don't know. So based on this that we have on the days, this was our day one. Okay, let's see, this was our day one based on 1 to 3 days. Okay, this was day one, and this was actually day two. This was day two. Okay, day two, and this was actually day two. This was actually day three today. Okay, because I'm talking about something that happened today. Okay, today was day three. I don't know if this is understandable. It's just so deep and complex. Okay, so I don't know if I'm even explaining it in a good way. If not, you can just tell me, and I'll try to make a better version of this. Okay, I don't care if this helps one person, as long as it changes somebody's life, it's good. So basically, this was actually Monday. This was Monday. So on the weekly template, we say this is day one. Okay, it never changes. Okay, and then this is gonna be day two. This is gonna be day two, because we know that everything is about consolidating and breaking out. So Monday, Tuesday gives us the weekly consolidation, and this is gonna be day three. Okay, you can also use the 4-hour time frame to get the weekly consolidation. Okay, okay, let's go. Okay, and Steve explains it that crazily well. Okay, because even this one, the templates, Steve explains them really well. Okay, so Monday, Tuesday made the high, which is good. Monday, Tuesday made the high. In other words, Monday made the high and Tuesday extended the high. And most of the time, this is where this gets interesting. And I repeat, just write this down. This is where it gets interesting. Okay, most of the time, by the time Monday and Tuesday have made the high and the low, one of this high or a low will hold for almost maybe 80%. Most of the time, the high or the low will hold. This is if this made this and this made this, you'll find that, okay, maybe the market will just go back. That will mean that this low like this low held, okay, it held, okay, maybe there was a short breakout in the market's reverse, or maybe this made the low and Tuesday made the high, and then maybe the market reverses. This held, okay. So most of the time, 80 to 90% of the time, one of these levels, either the high or the low, will hold. This is what will give you an edge, okay. Once you know this, you'll have an edge. One of these will hold. Let's go to last week. The high held throughout the week. Let's go to the previous week. The high held, okay. Most of the time, this will hold. The low was broken, however, after coming back in, it held, okay. The high, the low, this one held, okay, because the market broke out and came back in 3 pushes, but this high was still the high. The high of Monday still became the high of the week. So one of this level will hold, okay. However, we are talking about today, okay. So today gave me a day 1, day 2. This is GJ, because today I saw only 3 opportunities and I was happy with them, okay. I'll show you quite quick because this video is becoming long, but I had to explain some of the things that I believe were standing in the way. So day 1, yes, it opened low, closed high, okay. Day 2, again, it opened low, closed high. Day 3 was today because we had a high of day 2, so when it's broken, this becomes day 3, okay. This becomes day 3. That day 3 longs or short, this is day 3 longs, okay, because it did break. So what I did today was when I came to the markets, what's happening, okay, let me just, okay, when I came to this markets today, okay, this was the high of yesterday, which was good. So the markets opened here, and then what I did was I set an alarm here. I wanted an alarm. The moment it breaks the high, I need an alarm, okay. And when it broke, what happened? I knew that, okay, if you look at this market, it was going up, up, and up, okay. And then when the alarm sounded, it did what? It broke down. It broke down. This breakdown was a giveaway because markets break out, pullback trend. Markets break out, pullback reverse. They break, pullback and consolidate. When we go to a lower time frame now you will see, you see, the markets were continuously hitting this level. So this level broke, okay. This level did what? It broke. Let me choose a blue color. This level broke. As you can see, they've hit it the first time, they've hit it the second time, they've hit it the third time, then they broke structure on the inside. My previous video, they broke structure on the inside. What time is it? Oh, 8:08. They broke structure on the inside, and immediately when they break structure, they are giving you an opportunity for a pump that will bring a dump, okay. Once you understand that, you are good to go. But for me, I told you one thing about me. The more time you spend on the charts, the better you will understand. For me, I was on which time frame? I came to, the moment the alarm rang, I just came and saw what it was doing, and the moment it gave me this pin, the moment it gave me a pin, I was in. I sold it here. Why? Because I'm not saying do that. Why? Because it might keep on going higher and higher and higher. You are not sure if it's gonna reverse, okay. The best place to sell is after there's a break in structure, they come back, they log. This is where I added more position, okay. You enter with a very small lot, and then when they pull back, this is where you add position. This engulf candle, after they pull back, okay, this becomes that high candle, that's Stacy called the high bear candle or the high bull candle. In this case, it's a high bull, Okay, I just love painting it light gray. Okay, then I know that once they've broken, they will try to trade back into this candle. So when they broke, they pulled back. The moment they engulfed, and this engulf closed almost inside of the EMA, I entered and I put my stops here, and because I already had an open position from here where the stops were here, I just bought this. I bought the entry. Actually, I bought my entry down. I bought this entry to this level, okay, and this became my new stop loss. Okay, so from this position, I was not longer using my capital, I was using the capital from the market. And when opening a new position here, that's when I started using my position. And my target was 50 pips. Okay, from my entry, I got that 50 pips. Okay, from my entry, I didn't change my take profit, it was only 50 pips. So basically, it was somewhere here. Okay, so this was my take profit. Okay, this was my take profit. Okay, so it's so easy. What I do usually is, and I took this from Stacy. Stacy's a good guy, guys, knowledgeable. I took this from him, and that's where, for like, if the prices are like this, I'll pull a calculator. I don't like maths anyway. 182 .787, and then we subtract 50 pips, 0.50. This gives you where's the calculator again? But anyway, if you are minusing 50, you just change the 7 to 5 to 2 actually, because you omitted 50 pips. So you see the line comes straight here. Okay, the line is gonna come straight. Oh no, it came down here, but I told you my initial take profit from here was 50. So what you do is wait, if you're not gonna use the calculator, you can just, okay, when it was here, I just changed this to 4. Why? Because this is like, it was 9. When you subtract 5 from that 9, it gives you a 4. And then you see, this was my take profit. And when I entered again, I didn't change this take profit. Okay, it remained the same, however the position changed. So this was a very, very good one for me for today. Even though entering here is risky, but based on the time I spend on the charts, I know that it's capable of touching. But that doesn't mean it's locked. This is where the level gets locked. When they break out, trade back into it, and it fails, this engulf is a good sign you enter. And then this shows that the level is locked. Okay, and then it goes down. Don't be too greedy. Just take what you targeted from the beginning. Okay, and then I saw another great opportunity on Euro JPY. If we can start here. Okay, let's just start here. This market. Okay, let me go to a 1 hour, because I told you I use a 1 hour. It's just that now I have this indicators, and yeah, okay, this is just whole numbers. Okay, I had a market that has been going down. On Monday, it gave me a day 1 because it opened here and closed here. This was my day 1. Okay, I can't take this as a day 1 because it's just confusing. Make sure you take the easiest thing. You don't want any confusion. Okay, if it's confusing, let it pass. So this was my day 1. Okay, it opened here, closed there, day 1. Day 2, opened here, closed here, it went higher. Okay, day 3 was today. So as you can see, today was day 3 going up. So you understand, based on the days. Okay, based on the days. Okay, so what I did was, okay, I knew that today was day 3. I don't even know where this line is coming from, so let me just delete it. Okay, but I used it today. So what I did today was, I calculated, this is the high of yesterday. This is the high of yesterday. What did it do? They fell 80 pips. So I know that, okay, if they fall 80 pips, to me it's like 75 pips. Okay, So what I'm gonna do, I'm gonna take this line over here. It's at the top. What I'm gonna do is I'm gonna take out 70 pips from it. So for those who don't want to do the maths like me, okay, we're just gonna pull our calculator. We punch in this price 157,734,734, okay, and then we just subtract, because now it's going down. We need to know our target down. We're gonna subtract 75 pips because it fell 80 pips. So we're gonna subtract minus 0.75. Okay. Okay, it's gonna give us 156,984. 156,984. 156,984. Okay, then you just press enter, and now this becomes our target. So we are targeting at least 75 pips to the top. However, you don't enter blindly. Again, I told you what happened. When you look at this market carefully, yesterday, yes, they went up, okay, crazy, and then they did this. They came down, okay, they came down, okay, threw the market down. When they're coming down, they're making higher highs and higher lows. On a smaller time frame, you can go to a 5 minute. Okay, however, don't go to a 5 minutes. This is important. Do this. You see, it came down and then it went up. When it went up, they broke structure on the inside. Okay, BIS. What are we expecting? We are expecting them to come to the top and hit the day 3. Are they always gonna do that? No. Hence, we have to monitor their behavior. So I moved that line again, but it was somewhere here, if I remember well. Okay, so it was here. So what happened was, it actually, I saw this during the Asian session. I don't trade it, but I happened to be doing something. Okay, I don't remember what I was doing. I think I was writing an assignment. Okay, so what I did, because actually, yes, I was writing an assignment. So I stayed and then I just looked at my charts. Okay, so I was expecting a day 3. However, look at what they did. They broke structure on the inside. Okay, we are expecting it to come and hit, because it's day 3. We want to see it going to the top and then give us a fake breakout or whatsoever. Okay, so now I have 80 pips down. I have a target of 75 pips because they didn't go beyond it. Okay, so what I did was I waited and I waited and I waited. Everything is timed, guys. Look at the time, 7 o'clock. This broker is it's behind in 2 hours. I always say that. So 7 o'clock is 9 o'clock. Look, 9 o'clock exactly. 9 o'clock exactly. They give you an engulfing candle. Okay, if you come to a smaller time frame, which I always do, okay, just look. They gave a beautiful engulfing candle. Beautiful engulfing candle. 1 minute time frame, same thing. Okay, 1 minute time frame. The 1 minute will give you a superb entry. That will give you actually a good profit taking point. Okay, it will maximize your risk reward ratio and reduce your stop losses. Okay, because you don't want to have big stop losses. And hence we always wait for a break of structure on the inside. They broke structure in the session before, and then they just came down, and all of a sudden, on a smaller time frame, now we have this. You see this? Because as they are coming down, they've already broken structure on a bigger time frame, on a 15-minute time frame, which caught our interest. Okay, so what do we have now? We also have this low bear. Okay, we also have a low bear candle down here that they will trade back into. We have this is the last bearish candle as they were going down. So we are actually expecting them to trade to this candle, this one, this black one. You can see this candle, this one. Okay, this is the last candle. We're expecting them to pull back to it. However, on a smaller time frame, they did what? They went up. They broke structure again on the inside on a smaller time frame after breaking on a bigger time frame. So now we were sure. What did they do? They pulled back inside. Okay, when they pulled back inside, they bumped at a number after trading back to the major bear resistant candle, and then after that they broke structure. They came back in immediately 9 o'clock. When 9 o'clock opened, they gave this candle, which is an inside candle. What does an inside there represent? A reversal or a continuation. So this candle represent, or it's gonna go continue or reversing. But after giving this engulfing candle, engulfing tells you that they are shifting zones immediately. So this is where my entry was, okay? And it goes where? It goes back to the top. It goes back to the top. It goes back to the top. It goes back to the high, okay? Because I want to see them breaking this high, okay? I want to see them breaking it. I told you on GJ, because I didn't have enough space. I didn't have enough space. Just look, this is where the day opened. This is the low. This is where they made their low. So they made their low somewhere around here. And if you calculate this pips, it was only 51 pips. So if they go 51 pips down, where am I gonna get my entry? Okay, this is one of the things I usually look at, okay? Because Asia traded and then they came down, okay? And then I didn't care about this. All I wanted to see was, I just want here, this is where they went high, okay? This is where they went high. And I showed you where I took the trade. The only thing I was interested in, because there was like, tell me, after Asia has traded, this is the low they make. It's only 39 pips. So come on guys, if I'm going to buy here, now I'm buying higher, and then I'm only gonna get 26 pips. So I didn't care about this. I wanted to see if they will come down and give the day the opportunity or after a fake breakout. But for this one, I knew I had a lot of room going to the upside. However, I didn't sell today here because look at the time. They were still going up. They're still going up, and I knew they had to hit this one. At least they hit the top very early, which on timing again, let's bring the timing element. You see it's 8 o'clock. 8 o'clock on 8 o'clock, it's actually 10 o'clock, okay? Because this broker is behind in 2 hours. 6 o'clock, it's 8. This one, it's 10 o'clock, and here it was at 7 o'clock. 7 o'clock, it's actually 9 o'clock because the broker is behind in 2 hours. So this was a very perfect one. This was a very, very, very perfect one for me. Very perfect on a 1 hour. And then this was 67 pip. However, you know me, I'm obsessed with 50 pips. So I always set a target of 50 pips. Well, up until a time when I am comfortable with taking everything, okay? Because the more time you spend on the graphs, the more you'll understand your currency, and the more you will know that it's the ADR, how many pips can it go as fast as possible, okay? Because this one is not as volatile as GJ. However, GJ is very volatile, okay? It's very volatile. And Euro, it's not that volatile. However, they are correlated, and this one is always leading. That's why it hit the top early, and it was a good sign that this one was following, because based on the correlations, I'll show you the correlations. Based on the correlations, these ones are correlated, okay? So this was a very nice opportunity to the top after breaking structure on the inside. This gives you assurance that they've locked the low, and you want to first make sure that the low is locked. I told you even here, and I entered early because I understood the behavior. However, you want them to break structure on the inside and then pull back, pump it up to give you a dump to the to the bottom. And as for gold gave me crazy pips today, okay? Gold went up during the Asian session, and then they broke structure on the inside. This is important, okay? They broke the structure. As you can see, they were going up and up and up. So they broke the structure on the inside. If you go to a lower time frame, that's where you will start to understand this. However, you must see a break of structure on a 15-minute time frame, okay? It's important. As you can see, they broke here. because when they go up they make lows, go up, make lows, go up, make lows, go up, make lows. And then this one broke the structure on the inside. Okay, it broke the structure. Okay, so after breaking the structure, this one, they begin to trap and trap and trap. And when I came to the markets, I think I came to the markets at towards 9 o'clock. Okay, because I was tired. I told you I was writing an assignment, so I had to wake up towards 9 o'clock. Okay, that's why I was able to see GJ, which actually took place at it took place at 10 o'clock, and Euro actually took place at 9 o'clock exactly. I came to the charts towards 9 o'clock. Okay, same applies to during the US session. I came to the charts at around let me show you. I came around 3 o'clock. Yeah, came to the chart at around 3:30. Yeah, 3:30 I guess. Yeah, so here they broke structure on the downside. As you can see, it closed outside. They broke structure on the outside, and then they went in. Look, 1, they hit 2, and they hit 3. However, there was this level that they just created just for themselves so that they can create a lot of liquidity, which was here. And then they broke structure on the inside from this level again. They broke the structure, and then they gave this candle, and then they gave this candle. And then I entered somewhere around here. This is where I entered. I think I did enter on a 5-minute time frame, because yeah, I entered on a 5-minute time frame. So I entered somewhere around here, and my stops overall were here. I didn't take them to the high of the day because gold was choppy. I saw it at around 4 a.m. It was a bit choppy, and then I had to wait and wait and wait. And immediately when it breaks structure on the inside, that's when you know that they're ready to go. However, you can't just sell here blindly. They pin and go down, and they pin and go down. You want to make sure that they gave you an engulf. No, wait a minute. I think I sold here. Yeah, I sold here. Yeah, actually, I told myself that I want to see them break this level for me to sell. Yeah, this is where I sold. Okay, this is where I sold. And yeah, I sold somewhere here. This is where I sold. Okay, so yeah, for me it was a good trade because I sold, and then I just went back to wait a minute. Yes, I sold, and I didn't wait for it to take profit because I went back to sleep before it could take my profit. Okay, because there was no time difference between this one. I bought GJ, I sold GJ, and I came and sold this one. Okay, almost at the same time, but GJ a few minutes before. Okay, so yeah, I sold it here. So because this candle went down. By the time, yeah, I was on the market already here. And then where was my 50 pips? I took 50 pips. Yeah, my 50 pips was roughly somewhere here. Okay, if you don't want to use a calculator, you can just pull. This is 54 pips. I knew that I should take it to the low of the day, the low of actually yesterday, not the low of yesterday, because I knew it was day 3, and day 3s are much yeah, I took it somewhere here to somewhere here because I wanted to take it to the low. Yeah, actually I took it to this point here. Yeah, I took it to this point. This was my reference point, this pin. So I took it to the pin. It means it kicked me out here, and I did. For some reasons, I was tempted to take it to I was tempted to hold it for more. Okay, but I just didn't because I've just learned that sometimes being greedy is not good, but for gold it's more volatile. I think I wanted to take it, yeah, I wanted to take it beyond the low of this, beyond here. I wanted to take it to here. I think it would have been 80 something pips. That's where I wanted to take it to. But I just thought, now let me not be greedy. Yeah, 70 to 80 pips. Yeah, I thought to myself, let me not be greedy. And beside, a new session was coming. And yeah, I didn't look much at this session. because I saw like it was choppy and choppy and choppy, and I just thought to myself, okay, I've taken, I don't want to give back to the market here. And I just looked for other opportunities, and I think I went to let's see, I went to London. Yes, because London is the same as US. So I came to London, and let me show you something that I did. Let me change it. Let's change this to 1 hour, because there's something I did. Yeah, is it this one? I think it's this one, or is it GPUSD? There's somewhere where I did this. Wait a minute. No, it was Euro USD, right? Because this one was, it gave a day one inside day, but it became, to me, I saw it as a day one. Okay, maybe I was wrong. Yeah, it seems like I was wrong based on the closing. Okay, I didn't do much. I just said this one was day one and this one was day two. So what I was expecting today was, because if it's a day one, it has to trap at the top. So I told you I woke up a bit late, because I came at around 3 o'clock, and yeah, I just calculated this pips from here, and I went up to 50 pips, and I saw, okay, it has gone beyond 50 pips. That was good for me. So when I came, I did this market was going up, and eventually I drew this as a break of structure on the inside. And then I think I went to a 5-minute time frame. Yes, okay, I went to a 5-minute time. Yes, I did actually. I went to a 5-minute time frame, and these two candles here. Okay, the timing wasn't that wrong. It was before 4, quarter to 4, I think. Yeah, let's look at the time. It was towards 4 o'clock, because I woke up late here. I came towards 3:30. So as you can see, yeah, it was 35. Okay, it was 35. So when I saw this pin and this engulf after a break of structure on the inside, that's when I didn't see quite well that this was a continuation pattern, okay, or whatsoever, still trapping or whatsoever it's doing. But because I projected this as a day one and projected this as a day two, because this one I analyzed it when I came to the screen. I didn't analyze these currencies before. Okay, this one I analyzed the ones that move in Asia very well, like GJ and stuff. As for Euro USD and Great Britain USD, I didn't analyze them, so I only analyzed when I came. So I came before 3:30, and when I just projected, I looked at it and I said, okay, this is day one, this is day two, this is day three. So I sold here. Okay, I actually sold here. Just want to be honest, I sold here, and after immediately selling here, didn't give I sold, closed the charts, and went back to sleep. I was tired, guys, because I'm telling you, I was reading an assignment till late, so it only gave me 10 pips. Okay, 10 pips, but I sold and just went to sleep. Okay, I didn't want much things to do, but it did break in structure, and then it did go up, and then it tried to go up again, and then it gave me this pin and engulf on a 5-minute time frame. Then I just put my stops right here, and I think it was roughly, was it close to 10 pips? This was 6 pips. Yeah, 6 pips. It was actually 5 pips. Yeah, 5 pips. And I sold this one. Unfortunately, you see what it did. Okay, because I was at least expecting it to come down based on what I said, that it was day 3, whereas I think I might have got it wrong. I'll check again. So yeah, this one I was expecting roughly 50 pips to the low, and this is what happened. So it broke out, pulled back, and consolidated. One of the good examples that a market does break and pull back and consolidate. It does break, pull back, reverse. It does break, pull back, and trend. So for me, I thought it was okay, gonna break out, pull back, and trend. But yeah, this one closed me. Anyway, I lost this one, but okay, it's fine. I'm not worried much about this one because it was only 5 pips. Yes, of which do I regret? No. Okay, I don't regret it. It met my criteria. That's why I took it. Anyway, now, so I believe it was long, confusing, and all sort of stuff, but I believe I tried to enlighten what I could. Okay, so thank you.